Mr. Manickam, thanks so much for taking the time out. Good morning. And it's been a few good mornings if you are indeed a sugar mill owner as well. I don't know about operations, but the stock markets are clearly factoring in some very good times ahead. Will these come?
Actually, it should come because the sugar market is a very cyclical market. You know, we have a 10-year cycle, and possibly we are getting into a cycle of, let's say, balanced supply and demand, and we are looking at a pricing which is going to be more friendly to the market. So we are looking at a shortage first time in 5 years globally. So, and we are also looking at a shortage for this year and next year. That's going to be good for the industry.
Kona, I want to get you in on the discussion. Just on the economics of it, the sugar output for this season has seen a decline because of weather concerns. Do you see more gain in prices from the current levels?
Well, the 15-16 season started on the 1st of October, and something that was very hot on everyone's mind was the topic of El Nino, which normally does lead to adverse weather conditions for a lot of the sugar producing countries. So, for instance, in Brazil, where they're crushing right now, it's too rain, which will affect the harvesting and the sucrose content. And in Asia, India, Southeast Asia, it's very dry, which affects cane growth and cane development. So that has caused a lot of supply side concerns for the new season. And then on top of that, I think generally after 5 consecutive years of surplus, the sense is that this year you could see finally the market returning back into a balance.
Kona, so after 5 years of oversupply and decline in prices globally, are we now looking at a gradual steady up move in prices?
I think volatility is definitely back in the market, and you know, we really need to see those stocks being drawn down before you can start expecting a sustainable increase in prices. The other thing you don't want is that prices shoot so ahead of themselves that you start sending the wrong signals by telling producers to start producing too much sugar, because we don't need more sugar. We need to get rid of the current existing stocks before we can encourage producers to sell more. So I think we need to the market needs to be a bit more cautious in its bullish upturn. I know after 5 years of consistently falling prices, the market's desperate for some upturn, but we don't want it to move too fast too soon so you start sending the wrong signals.
An important point that you made, Kona. So, I mean, do you see the global demand supply surplus now get into a balance?
Yes, we think the market, up until last season, was in a very, very big surplus, but that this year we're moving back into a deficit. It's not a substantial deficit. We're not talking, 3, 4, 5 million tons. No, we're only talking less than 2 million tons. And that could easily change depending on yields in India or yields in Brazil. And, again, if the price stays too high, then the Brazilians will get the wrong signal and start producing more sugar versus ethanol. So we think that, yes, the market's no longer in a surplus. That said, I do think that we need to keep the market fairly contained in order to make sure that the market stays suitably tight. In Brazil, there are structural problems. In terms of capacity, there's very little investment happening around the world in sugar producing countries because prices have been so unattractive for so long, and you're not going to materially turn it around overnight. So the market does look a lot more constructive than it has been for many, many seasons, but we just need to be a little bit cautious.
So, Mr. Manickam, we've got somebody who's spoken about the global perspective as well. Let's talk about India. Now, assuming that the global sugar prices do inch up a bit, what's the room for Indian prices to go up? Because it does have a bit of an impact on inflation as well, not that it's a problem currently. How much do you expect sugar prices in India to move up by over the course of the next 12 months or the next 18 months?
See, the prices today are about 26 and our break-even is 34. So we need the prices at least to go to 34 for the sugar industry to be comfortable. So we are now looking at maybe correction in the 28, 30, which is still not enough for us. So India would need to probably export about 3 million tons of surplus sugar out of this stock that we have. before we come to a balance. So going forward, I think next year looks good. And as Kona was saying, I would be cautious in saying when the prices will go up to the level that we want, about 34 to 35 rupees. But its direction is no longer negative. It's kind of positive, and it looks that we will get to 34 sometime.
How soon could that be, Mr. Manickam? Because Kona also was raising the point that, prices are running ahead of themselves too.
Not really. I mean, because we are, we were at a peak of 40 rupees about 3 years back. And even last year, this time, we were about 9 rupees above what we are now. So I think, the deflation in the economy in the last 2 years has been really hard. So 34, 35 looks reasonable for the industry. And for that to come, it may even take another 4 to 5 months. I don't see it happening overnight, but it'll take probably, sometime February, March is when we'll have a better signal on prices.
Mr. Manickam, my question is more about what happens post that. Whether it moves to 34 or 36 will be a factor of demand and supply. I was speaking to a few exporters who operate out of the wholesale markets, and they were saying that their numbers for sugar year 2017 point to an opening stock of just 2 million tons. And they believe that because of such a low opening stock, because a lot of farmers will not plant sugarcane because they have not been paid arrears in the state of UP. And therefore, the production in India will be lower, and hence the opening stock will be lower. And because of that, they believe that there will be a sustained uptrend purely because of demand supply, not because of what the mill's economics are. So my question to you is, irrespective of what your break even is, where do you expect sugar prices to land over the course of the next 18 months?
Right now, if the prices go above break even, then, the farmers' arrears start getting cleared, and you actually will have the farmers going. So whatever shortage you have will be probably about 6 months to 12 months period. And India has an inventory of almost 9 to 10 million tons right now. I think the entire surplus of the world is sitting in India. So we have no fear of running out of sugar unless we export too much. I don't think exports are going out today as it speaks. We are still awaiting some packages from the government of India for the export. So even today, the parity for export is not there. So I don't expect that's going to run away that quickly as, some trade would say, because trade always jumps the gun before the industry.
So, Mr. Manickam, just trying to understand the math here. Every 1 rupee uptick that you see in sugar prices, how much does that translate into your EBITDA per se?
For us, every rupee will be almost about 20 crores on EBITDA.
And what's the quantum of losses that you had in the last year, Mr. Manickam?
We've had maximum of 200 crores negative. So we need almost about 10 rupees up from where we were last year. Last year, the average was around 23, 24. That's why I'm saying 34 is somewhere, someplace where we'll be comfortable breaking even.
Again, maybe it's a futuristic question, but the final question for this discussion: do you realistically believe that sugar companies, by and large, Sakthi or some of the others, by and large, will be able to make profits, if not in the current sugar year, then in the next sugar year, because of ethanol, because of power, because of cogen?
See, because of cycles. All these are small symptoms which happens once in a way. The government policy interventions, everything are symptoms of the situation. But normally, if you look at the sugar industry, we are balanced on a 10-year cycle. So given the cycle, I think we do have about, last time, I think probably we had a long cycle of negative parity, which, has been unusual. We've never had 5 years of surplus in a row. But now probably we're coming back to parity, and you'll have the cycle coming back. And as long as the demand for the product is increasing year on year with the population going up, I think the industry will do well.
Wow. Cycle coming back, a 10-year cycle likely. So Mr. Manickam is bullish on the space. At least he is not bearish, which is a good thing. Quite frankly, he calls a spade a spade. Until now, he's not been bullish. For the first time, I'm hearing him bullish. So that's good to know. Mr. Manickam, Kona, Haque, thank you so much, both of you, for joining in and throwing this perspective on why is there a rally in the first place.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.